Can banks really create money out of thin air? Like, just type it into existence? Sounds like a conspiracy, right? Well, here's the shocking truth. They actually can. And it's not a glitch in the system. It is the system. But don't freak out just yet. Let me explain how it really works. When you get a loan, like a mortgage or business loan, the bank doesn't hand over someone else's savings. Nope, they just type the money into your account. And boom, new money is born. It's called loans create deposits. The moment they approve the loan, that amount shows up in your balance, and it didn't exist a second ago. It's not magic, it's accounting. The bank records your loan as an asset and your new deposit as a liability. That's it. That's how most money in our economy is created. But banks can't just go wild creating money forever. That's where the Federal Reserve steps in. The Fed creates what we call base money, the raw stuff like physical cash and digital reserves that banks use behind the scenes. The Fed can add or drain this base money by buying or selling government bonds in what's called as open market operations. So banks expand the money supply, but the Fed controls the base layer they rely on. If banks can create money with just a few keystrokes, why aren't we all billionaires? Because they face real world limits. First, capital requirements. Banks must hold a chunk of their own money, called regulatory capital, for every loan they give out. No capital, no lending. Second, liquidity needs. If someone moves that new deposit to another bank, the first bank needs reserves to settle the payment. No reserves, they have to borrow from other banks or even the Fed. That keeps them in check. Third, there's interest rates. The Fed also controls how much lending happens by adjusting interest rates. Higher rates equals less borrowing, equals slower money creation. And here's a wild fact. In 2020, the Fed dropped the reserve requirement to 0%, but that didn't give banks a free pass. The Fed simply switched to a system where they control lending by adjusting rates, not fixed percentages. Lastly, there's the human factor, fear and demand for loans. Banks are businesses. They don't want to lose money. So even if they can lend, they won't if they think you won't pay them back. If people aren't confident, they will borrow. If banks are scared, they will lend. It's not just math, it's psychology. That's the final break on this system. So yeah, banks do create money when they lend, but it's not unlimited. They're tightly reined in by capital rules, liquidity needs, central bank policies, and plain old human caution. It's one of the most misunderstood and coolest parts of how money actually works. Did this blow your mind? Let me know in the comments. Hit that like button if you learned something new, and subscribe for more mind-blowing money truths.